Hello dear aspirants, we are happy to announce that we are launching a new series for YouTube whereby we will be conducting certain classes related to current affairs. So as a start, we are beginning with economy related current affairs. The first topic that we are going to discuss is regarding tokenization of card data. You should understand the context in which this is being spoken of. This is not something new. This happened in the month of October itself, where the RBI gave the circular to all banks and concerned stakeholders, especially the e-commerce website, that all those players who are holding the information of a card, right, the debit card and the credit card that we are using, if you are holding that particular data for checkout purposes, for easy payment purposes, and all this storage should no longer happen in your database because it is prone or vulnerable to certain data theft or frauds. In order to protect customers from any kind of breach of data or frauds, the RBI is giving this kind of protection whereby the card information that we have, for example, if you are having an account in your Flipkart or Amazon, in order to check out, you will be saving the details of a card for easier and faster checkout. So from now onwards, you should not have this data because this data is a very sensitive data. Rather than holding this particular data of a card, you should tokenize this card. For example, if you have a card which starts from 4500 and ends with something, it's a 16-digit card. This card detail should no longer be present in your Flipkart or Amazon account. Rather than this 4500 number, you can have something else. And this is called as the token for that particular card. So this token or tokenization is a process of substituting another number in lieu of this 16-digit data that we have on our typical debit cards or credit cards. So once these cards are tokenized, this card data will only be available in the records of the bank and card companies, which means that no longer card data will be accessed by these third-party intermediaries or e-commerce websites. Clear? So this is the idea of bringing this particular norm of tokenization. Now, when we ask how it works, in order to bring out this tokenization, we need many stakeholders in the interplay. For example, you have a card that is being issued. So you have a bank account. You need now a card or the payments systems which have to provide you with this particular card. So you might have a Visa, you might have a RuPay, Mastro, MasterCard, whatever it is. So these are the two players. Now, in between of these two, we need a separate player who has to tokenize this particular data. So in order to tokenize, we need the robust infrastructure. There are many fintech companies which are involved in this tokenization process. For example, Razorpay is one such player. So they can allow for the tokenization. Once this tokenization is done, these three players will have the information among them, and a third party will no longer, for example, Flipkart will no longer have access to your particular data. But for this to happen, in the month of October, when RBI gave out this guideline, it said that December 31, 2021 is the deadline. So by December 31, all of the card which is being stored in your database have to be tokenized, or else you should not store the data. So before transitioning to this tokenization, many of the players were concerned that they don't have the adequate time to transit. And they said that we don't have many players for tokenization, and so the client database or the customer base is so high, so we need a little bit of extra time. So taking into consideration the concerns raised by these stakeholders, the RBI has given or extended the deadline by another 6 months. So that is why it was in news in the previous weeks. Now, coming to certain concerns that these players and stakeholders have said about this particular process of tokenization. They say that why there is an unnecessary hassle that is being put on both the e-commerce websites as well as on the customers. For example, to tokenize your card, one has to give your you have to give your assent. You have to authorize this particular tokenization process. So you need to give your OTP, you need to give your consent for your card to be tokenized. How many will be giving their consent right now? It cannot happen overnight. So once this consent process is coming out, many of the customers will move away from saving the data. So once you don't want to save your data, on everybody is going to inadvertently push away from using card, and they will check out using cash as a payment mode. So this goes against our idea of digital banking, isn't it? So this is one effect that could be in place. And also the time given by the RBI, just 6 months deadline, is not enough for these players to move. And already online card transactions are safe. Even though you have a card, nobody can check out using your card without your OTP or your CVV, isn't it? So when there are layers of protection, why is there unnecessary layer of protection which is adding to the confusion? This is one particular concern. And also foreign cards like Visa and MasterCard have already complained that Indian government or authorities are favoring local or domestic payment systems like RuPay and UPI. And there are many minor companies. For example, Flipkart and Amazon is a giant, but there are very small e-commerce websites which also are holding our data for easier checkout. They can't transition very quickly, and for which their estimated loss for the merchants that are going to have this kind of unnecessary burden is going to be around 20 to 40% of revenue loss, is a very an estimate given by certain players. So this is the particular idea about tokenization. I guess you get this particular idea. Again, by June onwards, none of your card details can be held by these e-commerce websites. The second scheme, or the important current affairs that we are going to discuss today, is related to the PLI for semiconductors. So this is being touted as one of the landmarks in changing the infrastructure for semiconductor business in India, industry in India. This is a 76,000 crore package or an incentive scheme which has been approved by the cabinet. You should understand, why are we talking about semiconductors? So we are talking about semiconductors because there is inadequate supply of semiconductor chips in the global market across the world, especially due to pandemic, and also due to the monopoly of certain players. For example, TSMC, Taiwan Semiconductor Manufacturing Company, is having a global share of nearly 58% in chip manufacturing. So likewise, we are import reliant. So most of our semiconductors are being imported from other countries. So what is this particular scheme about? This particular scheme talks about fiscal support of up to 50% of the cost of setting up semiconductor fabrication plants. Fabrication plants is very, very critical because, for example, you would have heard about the 12 nanometer fabrication, 7 nanometer, 24 nanometer. These are all progresses that are being made on the fabrication process. Fiscal support, the government will give support up to 50% of the cost of setting up a semiconductor fabrication plant. So this is one key incentive here. 30% of capital expenditure will be given if it is not fabrication but for assembly, testing, marking and packaging. If you see, this is the route in which we can bring many other players. For example, setting up fabrication is not going to happen overnight, but we can enable the already established players like Intel, TSMC, MediaTek to come into India and set up their ATMP plants. They can outsource the semiconductor assembly and testing to Indian manufacturers. So this can happen. So if this is happening, 30% of the capital expenditure will be met by the government of India. And also product design. So once the product design is done, anything that is related to the product design, any cost related, up to 50% will be covered as eligible expenditure, and for that the government will be giving incentive. Once this particular design is out, it has been deployed in the product, we are going to have an incentive of 6% given to that particular company. And also 4% every year. PLI means product linked incentive schemes. So therefore, as the products or the sales are going up, we need to increase a particular incentive. So what is the incentive? The overall incentive is going to be 4% of the net sales. Whatever you are selling in the market, 4% of that will be given for 5 years under this PLI scheme. So integrated chips, system on chips, these kind of manufacturers will be receiving this particular benefit. So this is touted to be the game changer in this semiconductor industry, because this is very, very critical for our 5G adoption, for our digital infrastructure, for industry 4.0, and all these things that are to come up. So all the potential upheavals or disruptions that we are going to make, semiconductor is very, very important, and for which we are trying to bring in a concept of make in India for this. So this could happen. So what are the main advantages and challenges involved in this scheme? First of all, we are going to have employment. So nearly 10 million new employment is going to be generated if due to secondary and primary effects of this particular. So any kind of demand that is rising, for example, in the last 1 year, there has been a demand for semiconductors, and this is exerting a pressure on Indian rupee and Indian economy. This demand can be met if we are going to bring out this route. So India can also project itself as an electronic hub for all across the globe. Horizontal benefits. For example, there are a lot of companies which are dependent on chip. You could have heard about Ola company, which was bringing out a scooter, which is an electric scooter, and much of its supply chain was disrupted because they didn't get a smooth flow of semiconductors. Likewise, car manufacturing has stopped because of semiconductors. All these problems will be met once we are operationalizing this particular scheme. And there are a lot of MSMEs which are linked with production of parts and other ancillary items related to semiconductors. They can also benefit through this particular scheme. But there are challenges. What are these challenges? First of all, when we are going to give this particular subsidy, then this subsidy is going to be a tax burden on people. Secondly, there is a fear that just by giving a lot of subsidies towards semiconductors, we are not allowing any shift in other forms of technology. So there is a fear of misallocation of resources, disruption of market-based demand and supply could be disrupted once we are going to pump in more supply through this. Cronyism is another problem, because PLI is mainly an administrative scheme, and therefore once there is any kind of nexus between the politician, the executive, and the particular business, there's going to be lobby, there's going to be cronyism, nepotism, and all things involved in this particular scheme. And also, even if we are going to make this a success, the aggregate demand is not going to shift towards any other alternative. We're only going to spruce up supply. So alternatives or research and development is not going to mainly happen, and this is one fear from this concern about this program. So what we can do right now, so what is the benefit right now is that, one, India and Taiwan, the TSMC company, which is one of the global players in this, has signed an MOU for a fabrication plant. So they have said that this fabrication plant can act as an anchor manufacturer. Once it is being an anchor manufacturer, other companies can revolve around it. So this is going to be the anchor around which other companies are going to develop. Intel, which is also a major player, has also welcomed this move, and they've also suggested that if this move goes well, they can also seem to assemble their chips in India. Clear? So what we need, and also you should see that this has to be seen in tandem with the already existing PLI scheme. For example, we have PLI scheme for large scale electronics, IT hardware, telecom, white goods, and all these are all dependent on semiconductors. And that's why this particular scheme is being talked about as a major player in changing the semiconductor industry in India. So what we need is, apart from just focusing on subsidies, a vibrant semiconductor industry needs to be developed in India, and for which ease of doing business, the overall climate of doing business, the FDI norms, everything needs to be liberal and relaxed, so that we can pitch ourselves as the next big thing in this manufacturing of semiconductors. The third topic that we're going to discuss will be the prompt corrective action. So you could have heard about a prompt corrective action framework for NBFCs. Till now, prompt corrective action, which is a surveillance and a monitoring program for banks, was only there for scheduled commercial banks. Due to persistent problems in NBFCs, starting from the ILFS crisis till now, there has been talks among the RBI that they should put in a kind of mechanism to also monitor their financial strength. So what we have done for that is that we have also, the RBI has come out with a detailed prompt corrective action plan, PCA norm for NBFCs. And immediately it says that it is only for those companies like the NBFC deposit companies. It is applicable for all deposit companies, all deposit taking companies. And if it is a non-deposit taking company, NBFC, then it will be only from the middle, upper and top layers. So why do we have this kind of a classification? This is also a little bit contextual. For example, in the month of October, RBI came out with a differential scheme or a layered kind of approach for classification of NBFCs. The base layer are NBFCs, both deposit players, deposit accepting as well as non-deposit accepting NBFCs, but they are having a threshold of less than 1,000 crores. Any companies which are having extra will be called as middle layer. Like this, we have upper layer and the top layer. The top layer has to be empty, which means the NBFCs which are becoming so big should not be allowed to become so big, or else they should be converted into a bank. So ideally, the top layer should be having no player in it, but this can change if the scenario of Indian economy changes or warrants any particular change. So likewise, this is a kind of a structure that is being laid out. This PCA will be applicable for only these three. For example, here we don't have any players, these two players only, if it is a non-deposit NBFC. If it is a deposit taking NBFC, then all these three players will be, all the players here in this three layers will have to be subscribing to the PCA norm. So this is the particular idea being put forth. So what is this PCA norm is what we are going to see. So if you see here, PCA, we have put on certain indicators. As in the banks, there are certain indicators. If these indicators are breached by the NBFCs, then certain measures can be taken. So what are these measures? Right? An action will be prompted once you fail in certain criteria. So what are these criteria? First criteria is capital to risk weighted assets ratio or the capital adequacy ratio. So you'll be reading that in your Basel norms, which is what is the total of your capital, what is the capital over your risk weighted assets. So this, according to the Basel norm, should be 8%, but India for banks is requiring 9%. Likewise, for NBFCs, CRAR or the capital adequacy ratio will have to be kept at how much? 15%. So once it is less than 15 but above 12, then it is breaching the threshold 1. If it is going below 12, threshold 2. Below 9, then threshold 3. So for threshold 3, there will be some kind of restrictions. So penalties or restrictions will be put so that you are able to change the business of your particular company. This is the very reason that we have bought it. So tier 1 capital, 10% should be there. NPA, net NPA should be at least above, it should be not exceed 6. So when it is exceeding 6, then something is problematic and you will come under the PCA norm of the RBI. There are, if you see here also we have certain categories. For example, all deposit and non-deposit, which is the upper and middle. This is the upper and middle will only have these three. But net worth or the total net worth and the leverage ratio, this is also something that you will be reading in your Basel norm. this has to be applicable, or these two factors will be applicable only for CICs, that is core investment companies. Right, this is a new brand of NBFCs where 90% of the income is through shares and securities or a holding company. Okay, so these are the indicators of the PCA for NBFCs. So once this is being breached, let's say once this is being breached, if 15% goes and if it is risk threshold 1, then there will be dividend distribution or profits distribution, shareholders equity, this all will be restricted. Once you go into the risk threshold 2, there will be another restriction on branch expansion, which means you cannot open up a new branch. Risk threshold 3, once you breach this third threshold, then there will be extra bit of penalties on you or extra kind of restrictions on your activities. Clear? So this is the PCA. It follows the similar line for the PCA for banks. Clear? Now, as a concluding part, we will discuss certain highlights of the report. So there were two important reports which were published in the month of December. One was the report on banking trends. Second was a report of Financial Stability Report, FSR. So what are these important highlights? So banking trends we'll see first of all related to how much savings has happened, how much credit or lending activity has happened. So last year was a year of pandemic. We do know we were on the path of recovery due to risk aversion. Because people are averse to risk, they feel that they have to save. Many of the people have deposited more and more money. For example, they have pledged their loans, they have sold their assets and converted all into bank savings. So the bank savings have risen. The deposit base has increased from 140 lakh crores to 156 lakh crores. So this is the total number of deposits which has shown nearly 12% increase. But how much has it translated into loans? The credit, if you see, it has only increased from 103 lakh crores to 108 lakh crores. This is only marginal increase. So what this is this shows that deposits have increased, but credit growth have come down. Or we can say this is called as a scissor effect. What is scissor effect? For example, if you see here, this is a particular graph. If you see the deposits have increased. But if you see the credits have come down. So this is a kind of a scissor, isn't it? So this scissor effect will happen when two coordinates are completely diverging with each other. So this has happened. Why? Because more and more people are a little bit pessimistic and they are having risk aversion, due to which they are depositing and they don't want to take credit. So this credit growth has been muted, one majorly due to retail investors or retail borrowers coming down, and also wholesale borrowers or the borrowers from the business firms have also dropped. So these two are an important trend that we were able to see in the last year. Coming to other important criteria. First, we saw about the business of savings and lending. Now coming to CAR. The CAR ratio, which is the strength of the capital that particular bank is having, has increased, in fact strengthened from 14.8 in 2020 to 16.3 now. As recently of September 2021, it has increased to 16.6. So what does it mean? It just means that all banks are adequately capitalized, which means they have sufficient capital to run their business. Why has it happened? First of all, you should understand that whenever CAR is increasing, either capital will increase or your risk-weighted assets will come down. The gain that we had in the last year is mainly because of the decrease in RWA or the risk-weighted assets, because most of the assets have not become translated, has not become credit, and that is why it has come down, due to which this seems to be a healthy number. But problems will resurface once this risk-weighted assets increases. Coming to most important criteria called as the NPAs. So non-performing assets. So when it comes to non-performing assets, see here in March 2011, the total NPA of India was around 2.4 and it has been increasing since then. It reached its peak of 11.5 in March 18 and in last year also. This is contrary to perception. So most of the people would be perceiving that in the year of COVID, in the year of slowdown, NPAs will increase, but it has not. In fact, it has come down to 6.9. So NPAs has decreased in the overall bank. So is it something that we can take in the face value? No. Because even if since 2018 NPAs come down, it is mainly because of write-off. So most of the banks or the NPAs have been written off by the RBI or by the respective banks, which means they have a stress. Even though you are writing off a particular loan from becoming an NPA, it is a stress nevertheless. And how has it increased? Because this NPA has come down, income has increased from the investments, trading has increased, yield has increased. All this are happening on the positive note, due to which profit is increasing. We will come to that in the next slide. See here, NPS, the financial stability report does flag the concern that once this particular period is over, why did the NPA decreased last year? It is mainly because of first moratorium, which means no need to pay back loans. Second, no need to classify something as an NPA. So all this kind of regulatory relaxations were given. That is why NPA is decreasing. Once the period is over, it will start to become high. So the RBI in its financial stability report says that next year the total NPA of all banks could rise to 9.8%. Here, so there is an imminent risk, and that is being shown in the SMA, special mention account 2. That has increased. If you see the trend report, then this has particularly increased, which means imminent. This has a possibility of becoming NPS. So the risk is always there regarding NPS. Profitability. Last year, the profit or the total profit of banks has increased from 0.2% to 0.7%. Why? How will profit increase? One, expenditure has come down. What is a bank's expenditure? The amount of interest that it pays on depositors. It is reduced, or the interest expenditure of a bank has come down, and also income has been coming in, stable income, or there has been no pressures regarding its income. For example, NPAs have not increased. Why has NPAs not increased? Because moratorium has been there. There is a relaxation in the asset classification. Dividends need not be given to the particular shareholders. For example, if a particular bank has had a profit of 1000 crores, this has to be distributed among the shareholders. But in this year, last year, RBI gave that not all money has to be distributed. So something has to come back within the bank. So this is all reducing, or it has favorably impacted the banks, but the risk is always there. So steep lending. So in the last year, if you could see, the lending rates of RBI has come down, which means in the market also it has to transmit. So when the interest rates have come down, the banks are first of all slashing the deposit rates. The deposit rates have come down very quickly, and also rather than giving loans, they are booking profits through repo operations, through reverse repo operations, and all these things. Clear? So and also most of the amount that banks are having has also gone into purchase of treasury bills, purchase of government bonds, and other financial instruments, due to which they have been having a steady flow of income. So these are certain trends that we could achieve in the last year. There are a little bit more to discuss. We will discuss all those in the next class. So until then, it's me signing off. Thank you. Stay tuned. We will see in the next video.